This week on the Wall Street Report, the Dallas Fed says we haven't solved too big to fail unless we break up the nation's largest banks. The former congressman who wrote the too big to fail amendment of the financial reform law weighs in. After nearly 4 years since the financial crisis, how much healthier are the banks? We'll take the pulse of the banking system with a top banking expert. Plus, are stocks poised to roar again in the second half of the year? Our experts break down their outlook and where they're investing now. Hi everybody and welcome to the Wall Street Report. I'm Jennifer Schonberger. Word on the street is more volatility could be in store for stocks as the economic recovery remains spotty, the European debt crisis deepens, and earnings growth slows. Meanwhile, scars from the financial crisis continue to haunt Wall Street, with concerns resurfacing of whether the 5 largest banks are still too complex to manage. We'll explore these issues during the show. First, here's a look at what's trending now. Earnings are growing at a slower pace in the first 2 years of the economic recovery. Meanwhile, business leaders and investors are growing concerned about whether Congress will arrest a looming fiscal cliff that could plunge the U.S. economy into recession next year if lawmakers don't act. Across the pond, the political fallout in Europe as a result of the debt crisis is raising the question of how much political will is left to keep the euro together. All of these issues will likely keep the market on edge as we go through the rest of the year.